Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for the Forex Trading Room on April 19th of 2020. As usual, we will be going through our standard agenda. Look at the prior week's results, our currency strength meter for the past 30 and 7 days, and that has been fixed on the website where I get these metrics. So we'll actually have a good RSM. Fundamental announcement calendar for the week to come, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting last week's results, the long-term ledger is what you're seeing on screen. No change, I think. Actually, yeah, we did close out the USD Swiss trade at break even. That's the first trade on your screen. I think all the other trades are pretty much still there. We are carrying a significant chunk of open profit on this account, far beyond the 4.77% we've got realized in gains. So we'll continue managing that. Not a whole lot of trades open, but they are moving nicely in our favor. The intermediate term ledger suffered a drawdown of about, I think, 3%, maybe a little bit under 3%. So again, just a normal waviness of the market as is usual during some periods. And we do have open trades, and some of them are at profit. Collectively, we are carrying a positive open profit balance on the intermediate term account. And last but not least, a short-term ledger. We did have a significant drawdown last week. The market was definitely not kind to our short-term trading. So we are down about 14% for the week. And again, most of the trades went against. There were only two winners, and they were relatively small. It was a very sideways week, but with a lot of intra-week bounciness. Of course, that is never a good recipe for short-term trading. Again, periods like this will happen. All in all, our accounts tend to go up over time. So not a huge cause for concern, but obviously not a good result for the week. Notes and opportunities for improvement. As I mentioned, a mostly sideways week with a dash of retracement. It was very bouncy in the middle of the week, however. So though you'll see that the end result for the week as regards market movement was relatively flat, though we did have some pretty steep movements throughout the middle of the week. And again, this was not the best environment for short-term trading. So we did have a drawdown on that account. Intermediate account only slightly down, and the long-term account is still carrying a nice open profit. The coronavirus is still the main factor, with talks of reopening for business in the U.S. as early as May, amidst protests from people who are tired of being under a lockdown, which, again, I try not to go too political in these sessions, but I think it was mismanaged from the get-go. Shutting down the economy for reasons that, again, don't make too much sense given the nature of the pandemic just didn't seem to be a good idea to me at the time. Doesn't seem to be a good idea to me right now, and it looks like more and more people are coming to that realization. So this weekend did mark a large number of protests throughout the country with people demanding that we do reopen business. As mentioned in prior sessions, our live event, which was originally scheduled for the end of this month, is, of course, going to need to be rescheduled. We're still hoping to have it sometime in 2020. It will still be in Wilkes-Barre, Pennsylvania, and the details will be on the website as soon as we have a little bit more information on when we can actually schedule this. Relative strength meter for the past 30 and past 7 days. So we've got a 20% movement in the last 30 days, with the losers being the dollar, the euro, the Swiss, and the CAD. We've got the Aussie as pretty much the only significant winner. Perhaps the pound can be added to that list. And of course, the metals have been the big movers, silver and gold throughout the last 30 days. If we look at the week that just ended, volatility was relatively low. It peaked at just above 2%. We still have the Aussie and the pound and the JPY as the clear winners. The Kiwi, the dollar, were probably the biggest losers for the week itself. Metals didn't do too well. Silver was significantly down for the week, and gold pretty much held on against most comers, but very middle of the pack. And then we do see the CAD, the Swiss, the euro was probably a loser as well. But again, a relatively flat market with only 2% movement throughout. Fundamental announcements coming up this week are reasonably late week. We've got the RBA minutes coming out tomorrow night, so we will be having our start of the week, our regular evening session on Monday. We're going to be starting late to accommodate these minutes, so we're probably going to be starting around the 9 p.m. time frame. And on Tuesday, early morning, 2 a.m. U.S. Eastern Time, we have the employment numbers out of the United Kingdom. These normally come out a little bit later than this time frame, so I'm going to have to verify that that is the correct time, but that is how it's showing up in the calendar right now. And if it does happen at 2 in the morning, well, that's within my normal trading hours. I do stay up until 3, 4 in the morning, U.S. Eastern Time, looking at the markets and doing other stuff. I really don't trade more than an hour or so a day, but I do take a peek at the market here and there, make sure everything's going the way, well, what's happening and what I can take advantage of. So if this is happening at 2 in the morning, I will be trading it live, so that will be in your email when it goes out for the scheduling of the week. Moving on to the chart, starting with oil, we can see that oil tried to do a recovery about 3 weeks ago, managing to go back up above 27 very briefly. And since then, it has just been trending back down to the prior low, which it almost exactly hit on Friday. So we have a low just above $17. And again, oil has been unable or incapable of recovering, even though quotas have been put in place by OPEC and a few of the other oil producing countries. That was the boost that it got 3 weeks ago, and it didn't seem to last too long. We're back down to the previous low, so we're still waiting to see what, if anything, is going to make oil do a bit of a recovery or get out of its current slump. Moving on to the currencies, euro dollar, the euro did not fare well against the dollar. And indeed, the dollar regained strength throughout most of the week. Incorrect. I'm going to say without too much logic behind it. It looks like the market was ready to support the dollar for, again, most of the week. We see that failing Thursday into Friday. It tried to go lower and failed, but we're going to see this as a common theme among the dollar charts, is that we did have mainly U.S. strength for the week. Pound dollar, same thing, U.S. strength, and we see the same phenomena on Thursday, Friday, trying to go lower and failing on both days, and that may be an inkling of the week to come. USD JPY, same thing. It went for better part of the week to dollar strength, and then on Friday, it just completely went in the opposite direction. So we did see dollar weakness against the yen Friday into close of market. USD Canadian, same thing. The USD CAD had, of course, issues in the middle of the week. It did not fare well, partly with the oil situation, and partly, of course, with the economic hit given the COVID-19 and this, that, and the other. But Thursday into Friday was a good recovery for the CAD against the dollar. So that dollar strength didn't really last too long against the CAD. Against the Swiss, pretty much the same story, with Friday being the turnaround into dollar weakness yet again after a good start of the week. Didn't go too low on Friday, but still it is starting to move back in the right direction. Aussie dollar, and we can see, and I want to point something out, which I'll be touching upon later. And that is, you can see that the Aussie dollar was trading within this range where I'm moving my mouse, trading in this range, and suddenly we had the breakout, went all the way to the bottom. This creates a gap, and markets, and there's a saying in science, and this comes, I think, from medieval times, and it's nequaquam vacuum, and it is that nature abhors a vacuum. So this creates a vacuum or a gap, if you will, and then there is a tendency over time for things to return to that prior range again, so long as there's nothing preventing them from doing so. So we can see this playing out on the Aussie dollar. We're going to see a few other charts that are showing the same thing, and even better, some charts where this, I guess, return to the prior trading range has not yet happened. It's going to give us really great opportunities in the next few months. So I want to touch upon that, which I will do later in this presentation. But just a reminder to everybody, keep an eye on something like this. When we see a trading range that is suddenly broken devastatingly, there is usually, not always, but usually a tendency for price action at some point to return to that prior range. And again, that will give you huge opportunities. Even if you miss the initial move, you're going to have the opportunity to trade it back to wherever it was coming from. Kiwi dollar, same thing. We had that prior trading range broken, and it is trying to move back up. And again, both of these, Aussie dollar and Kiwi dollar, are would be going into that prior range on dollar weakness. And I think dollar weakness is going to be something we're going to be seeing more of in the months to come. Aussie Canadian, this one actually already did it, so we can see that it broke that prior trading range and has already returned to the very bottom of it. So this is one where there was a significant opportunity to trade it back, and indeed we did catch quite a nice bit of profit off of the Aussie CAD along that recovery. Euro Swiss is one that has diverged and not come back, so we can see it still is trading towards the bottom. Now, there is a good reason for it to be trading towards the bottom, and that is the Swiss being a safe haven currency and the euro facing a lot of issues. Eventually, we're going to see it come back, but this one may take a while. I am still pretty hopeful that we're going to have a even deeper breakout towards the bottom, and we do have an open trade in that direction, which is now finally capturing some profit or holding on to some profit. We'll see how it continues to evolve. I don't think this movement is done, but again, once it is done, we're going to have just as big an opportunity to trade it back up as we have had trading this thing down. Euro pound, another one that is coming back to a prior range, and we have already been jumping into this trade, and we are carrying some very nice profit. It did break through the Ichimoku cloud last week, so that is definitely a positive, even though it did so on a mainly sideways move. But still, we can see the downward pressure on this pair, and we're still going to be attempting to trade it down even further towards the low 80s near the bottom of this chart. And again, we have multiple trades open on this pair, and they are at profit right now. Euro JPY looks like a heart attack victim's EKG. So this one I've been mentioning is a very tough pair to trade right now, simply because of these wild careening movements it's doing. Sometimes within the same day, it's going up and down by 400 pips at a time. So again, if you see trading as gambling, this is probably going to be your favorite pair. It certainly has the opportunities, but I don't gamble in my trading. I try to treat it more as a science, maybe with a dash of art here and there, but definitely this pair is not for me right now. Euro Canadian, this is another one of those gaps that I see as looking to be a great opportunity for it to return to its prior trading range, and that is an opportunity of 800 plus pips. So looking forward to that trade if and when it fulfills. Well, I shouldn't say if, I should say when rather than if. I do think it's a very high probability scenario opportunity here. So keep an eye on this one for that movement down. Pound JPY, it is, or it was rather, going into pound strength, yen weakness for quite a while since middle of March, maybe beginning of March, and has now sort of slowed down. It's still hanging out near the top of its most recent movement, but we do see that there has been a turnaround. Looks like 135.40 was the resistance level it couldn't break, and it's now starting to trend downward. That doesn't mean it won't point up again. It very well could. It could do it right now. But it does give you an opportunity there as well for another trip to the bottom if that movement continues the way it has been evolving. Too soon to tell, but keep an eye on this one as well. Aussie JPY doing much the same thing. We have seen Australian recovery, and this is another one of those pairs that had a nice gap that it needed to fill. It just about got to the bottom of that prior range before losing strength. I think this one may still have the energy to head towards the top. We'll have to see. It's sort of in no man's land right now, so we're waiting for it to break out in either direction. Euro New Zealand, we already opened a short position on this one, looking for a break of support and a trip again towards that prior trading range near to the bottom half of the chart. So looking like this time may be the one where it breaks support. Too soon to tell still, but we're cautiously into this one. And I think we were carrying profit by the end of the week when the market closed. Pound Canadian has stayed very near the top of its most recent range. And again, we have seen relative amount of pound strength. And of course, we've seen Canadian weakness like we haven't seen in quite a while. So this one has been trending very near the 178, which is the top level of resistance I have on this chart. I haven't traded this one in a while. I've been waiting for breakout in either direction, and I'm not going to be changing that approach. We're waiting to see what this one does and which direction it finally breaks out. And last but not least, our pound Swiss, also a nice recovery from the pound against the Swiss. It's sort of flattened in the last 2 or 3 weeks, so it has refused to go much higher than what it's done. In fact, it actually went a little bit higher this week that just ended, but not significantly so. And it is still hugging that line of support resistance at the 120.65. So another one where we're cautiously waiting. I think I have an open trade, a long trade on the intermediate term account, trying to trade this one back up towards the 125. It did break resistance, so technically we're in a bullish breakout or bullish movement, and it's also crossing the Ichimoku cloud in a bullish fashion, even if a little bit sideways. So I'll keep that trade open, see what comes of it. There's a few things I look for in the Ichimoku, and that's this green line crossing the prior candles. That is a bullish movement. A cross of the Ichimoku cloud in that direction, also bullish. And of course, we have the crossing of the Tenkan Kijun, the red and blue lines, also a bullish cross back here. So everything from an Ichimoku, which I use in the background very, very frequently, I just don't mention it a whole lot. Everything on the Ichimoku is telling me that this is a good buy right now. So I'm in it. We'll see how it pans out. That is the end of our charts. Setups I see in progress right now. Again, everything is going to be revolving around the coronavirus. So that is no change from what I've been saying the past few weeks. Nothing is going to change that until we're out of this lockdown and pandemic fear and all that. Coronavirus news is probably the one thing that is going to be significantly moving one currency against the other. So that's how we have to play the market. And finally, my words of conclusion here, and I touched upon this when we were looking at the charts. Markets run in cycles. Trading is mostly boring, and it should be boring. If you want to get your kicks out of the market, I would suggest you do something else, like going to a casino. Well, You could if they were open, they're all closed, but you're not supposed to get excitement out of the market. That's not the way to do proper trading. So markets running cycles, they routinely just trade within a very narrow range, and sometimes they diverge and converge and go back to that prior range, and then it just repeats. Divergence and convergence is the spice. If you want to get excitement out of trading a little bit, that's where you're going to get it when you see prices move far, far away from their usual trading range. And that is going to give you, as I mentioned before, a brilliant opportunity to trade them back. They will diverge, they'll move away from each other, and you have the opportunity to trade the convergence when they go back to where they were before. These are going to mostly be longer term opportunities, so don't expect this to happen in the middle of a week or for you to be able to trade a convergence within a couple of days. It's going to be weeks, maybe months sometimes, but I see several of these opportunities forming in the market right now, and I point as we went through the charts. But bear in mind, they did diverge for a reason. It just doesn't happen willy-nilly. The reasons, of course, are mainly COVID-19 related right now and a touch of the oil slump. But this is going to pass at some point. It's going to go away. And when those reasons go away, you have to be ready to trade these pairs back into convergence. I'll make every effort to point it out. And of course, I'll be trading this myself. But if you want to start looking at those charts and making notes on where you would go in long or short or whatever it is when the movement starts, I would suggest you start getting those setups ready right now. So that's it. Those are my final words here. My usual chart at the end. I'm always looking for ideas on how to get the word out to more people, how they could be making money without necessarily having to trade time for money, especially given the current situation. I mean, a bunch of people, last count, it was more than 10 million people. I think I heard the word 50 million or the term 15 million at some point last week who are out of a job just in the United States of America. You cannot expect trading to replace a salary from one week to the next. I've been doing this for more than 10 years. If I had started today, I would be scrambling. Luckily, I started more than 10 years ago. And at this point, my income does come from my trading and from my investing primarily. This is not going to save you if you're doing it, if you're starting out right now. But this COVID-19 thing, we're going to have more of them. Might not be a pandemic, might be something else. You don't know what the next black swan is going to be. The only thing you know is that there is another one coming down the pipeline. So take advantage of every opportunity you have. So next time this happens, you're like me. I'm not trying to brag, but I've not been looking for government handouts. I've actually been helping people out as I can because I'm in a position to do so. So let me help more people out. Try to give me ideas on how I can get the word out to more people so that next time this happens, they're in the same position I am right now where they're not concerned or not worried, they're not panicking about where their next meal is going to be coming from. Email me any suggestions at trader@specialeffectsacademy.com. And that is the end of the presentation for this start of the week. Any comments or questions from anyone? Okay, folks, thank you very much. We will be back tomorrow night for our first trading session of the week. And again, reminder, we're going to be starting late. There is an Australian fundamental. So we're going to be starting at 9 p.m. as opposed to 8 p.m. U.S. Eastern time. Thank you very much and talk to you guys tomorrow.